Collingwood Park. Land priced so amazingly low it'll let you afford that home you'd really
We've
like.
all heard the lecture. Stop buying avocado toast. Cancel your streaming subscriptions. Work hard, put 10% down, and buy a house. That's what we did. But what if the game isn't just harder for you than it was for them? It's the definitive piece of generational advice. It is framed as a simple mathematical equation of discipline. Financial restraint plus hard labor equals property ownership. But what if the game isn't just harder for you than it was for your parents? What if the game you are being told to play literally ended decades ago? Look at the numbers, and the illusion of a fair playing field completely evaporates. We aren't suffering from a lack of discipline. We are living through the aftermath of a quiet, systemic heist. To understand how deep the fracture goes, we have to look at the historical ratio between what people earned and what shelter cost. In 1985, the median house price in the Western world hovered around 3 to 4 times the median household income. If an average household earned $25,000, a home cost around $80,000. It required sacrifice, yes, but it was structurally attainable on a single average income. Fast forward to today. In major urban centers across the globe, that ratio hasn't just increased, it is shattered. Today, the median home price can sit anywhere from 8 to 15 times the average household income. While productivity and corporate profits have soared over the last 40 years, real wages have remained stagnant when adjusted for actual inflation. We are working longer hours and generating more value than the generation before us, yet our purchasing power has been systematically severed from the housing market. Most traditional financial advisors look at these charts and point to inflation. Some blame local zoning laws. Others blame greedy individual landlords. But the real reason your parents could afford a home on a single income while you drown in rent isn't a natural accident of economic history. It was a deliberate, calculated policy choice, and it started with a single global decision that changed the definition of a house forever. To find the smoking gun, we have to travel back to the 2008 financial crisis. When the global banking system collapsed, central banks around the world panicked. To stimulate the economy, they lowered interest rates to historic near-zero levels and began printing trillions of dollars in a process called quantitative easing. The public was told this cheap money was meant to stimulate the real economy, to fund factories, build infrastructure, and raise wages. But money doesn't flow where it is needed. It flows where it can generate the highest return. With interest rates at zero, keeping cash in a bank account became worthless. Investors needed a safe place to park trillions of newly printed dollars. They looked at residential real estate and saw the ultimate asset. Unlike stocks, humans legally and physically require shelter to survive. Demand is guaranteed. And so, housing was transformed. It stopped being a social foundation or a place to raise a family. It became a high-yield financial asset class. This brings us to the turning point of our story. When interest rates eventually rose to fight modern inflation, the mainstream media predicted a massive housing crash that would finally allow young buyers to enter the market. But that crash never came. Prices remained stubbornly high. Why? Because the buyer pool had changed forever. You are no longer competing against other families at open houses. You are competing against multi-billion-dollar private equity firms and institutional titans like Blackstone, Vanguard, and corporate asset managers. These entities don't need a 30-year mortgage at a 5% interest rate. They buy in cash. They buy in bulk. They purchase entire suburban neighborhoods before they even hit the public market. By converting these properties into permanent rental portfolios, they create a captive market. They artificially choke the supply of homes for sale, driving prices up, while simultaneously raising rents because everyday people have no other alternative. Let's take a pause here. Look at your own city. Comment below with the current average rent for a one-bedroom apartment where you live right now. And let's see how many hours of minimum wage labor it actually takes just to survive there. Let's map the reality together. This structural shift has silently birthed a dangerous new economic class system. Economists are calling it the rentier society, but historically it has a much older name: neo-feudalism. In a healthy capitalist economy, labor is supposed to be the primary engine of wealth creation. You work hard, you save, you build equity. But today, that engine is dead. Labor has been entirely decoupled from asset growth. If you do not inherit property, or if your parents cannot afford to act as a financial cushion, your labor alone can no longer purchase a stake in the society you build. We have split a generation into two distinct classes: those who own assets and collect rent, and those who own nothing and pay rent until the day they die. Your ultimate net worth is no longer determined by your work ethic, but by the real estate portfolio of your grandparents. When you strip an entire generation of the ability to own a home, you don't just change their balance sheets, you break the social contract. Property ownership has historically been the primary anchor for societal stability. It is the reason people get invested in their local communities, the reason they build long-term relationships, and the foundation upon which they feel secure enough to start families. The modern drop in birth rates, the delay of adulthood, the skyrocketing rates of anxiety, and the growing political radicalization among young people are not separate cultural phenomena. They are the direct psychological symptoms of a generation realizing they are paying off someone else's mortgage while being locked out of their own future. When a population realizes they can never truly own a piece of the society they labor for, their loyalty to that system completely dissolves. Your parents aren't malicious when they give you advice from the 1980s. They genuinely believe the rules they played by still apply. But telling a young professional today to simply save more money is like telling someone to run faster to catch up to a bullet train. The housing crisis cannot be budgeted away by individuals. It is a systemic defect that requires systemic warfare. It requires treating housing not as a speculative stock market, but as critical public infrastructure. We see hints of survival in places like Vienna, where massive public housing frameworks keep the market shielded from corporate speculation, ensuring that shelter remains affordable for human beings, not profitable for algorithms. Until we collectively refuse to allow corporate balance sheets to dictate the price of human shelter, the dream of ownership will remain exactly that, a dream.